Can I set up a whole life insurance policy for my newborn child? The answer is yes, and it's pretty simple. However, there are some limits to be aware of. We'll go over the limits, and then we'll look at an example of a policy for a newborn child. So we've got mom and dad here, and let's pretend that they've got life insurance in force. Dad has $1 million, and mom has $500,000. So they want to get a whole life insurance policy for their newborn child. Congratulations, mom and dad. And on average, we'll typically see clients put anywhere between $100 and $500 per month into a whole life insurance policy for their child. Now, some families will put in tens of thousands of dollars. Some will put in $50 per month. It always depends on the family's financial situation, but this is the average we typically see. So first, a couple notes. Regarding medical underwriting, a question comes up a lot with this, which is, does the child have to go through a medical exam? The answer is no. So you've got no exam, and underwriting is very limited. Typically, what's done with respect to medical underwriting is the insurance company will order medical records from the child's primary doctor. They'll review the records, and if everything looks good, the child is approved. Very simple. Now, the reason why parents will get a life insurance policy for their child is one, they're interested in building cash value, but then two, they also like the idea of getting life insurance for them. In the event that anything happens to the child, specifically they develop a health issue and they're unable to get life insurance later, now they've got life insurance locked in for the rest of their life, which is really nice. Now, there is a limit to be aware of, which is specifically how much life insurance their child will qualify for. So, the maximum amount of life insurance a child can qualify for will depend on the insurance company, but with most companies, you'll see that it will be anywhere from 50 up to 100% of whatever the parent with the most coverage has in force. And the parent does not have to have whole life insurance. It can be term life, it can be a combination of whole life and term. It doesn't matter. The insurance company will just ask, how much life insurance do the parents have? We want to know that before we approve this policy for the child. So in this case, dad's got $1 million, mom has $500,000. If they go with an insurance company that allows the child to get up to 100% of what the parents have, or the parent with the most coverage, that means Junior here would qualify for up to $1 million of coverage. But that would be the maximum. The only time a child can have more coverage than the parents, or get coverage if the parents have nothing, is if the parents have a health issue. That's the one exception where they can't get life insurance or they're going to be severely rated. That's a situation where we don't run into those same limits. So let's look at a quick example here. So here we've got a policy with $250 per month going in, and this is a Mass Mutual high early cash value product. So when we look at this policy, you'll see $250 a month or $3,000 per year going in. Now the minimum premium is about $530 per year. A lot of parents like to do this because if they plan to eventually give this policy to the child and they want the child to keep on funding it, well, guess what? The child is not obligated to pay $3,000. They could pay as little as $528. So they have the premium very low, which makes it flexible for the child if they want their child to begin saving money at age 18, 21, or at some point in their early adulthood when they're probably not making that much money. But when we look at this guy, we still want to do the same thing we always do, which is maximize the cash value. So $3K goes in. First year, they've got almost $2,700 in cash value, and the life insurance benefit in this example is $270,000 in change, and it grows quite quickly over time as well. So regarding the funding period, we do like to make this very flexible. This is an example that shows funding the policy up until age 18 or for 18 years, but they could stop much earlier or they could fund for a longer period of time. And if you do things right, you don't have to decide that up front. So here's the example we just looked at. We've got $3,000 per year going in through the age of 18. Then we've got the exact same policy. But what do you notice here? We're funding for 50 years. How you can tell it's exactly the same is look at year 18, the cash value and death benefit in both of them, and they're identical. The only difference here is we continued the funding, in this case, until they were 50. We could go until they're 85 if we wanted to. I just picked 50 because it's a round number. Or if they change their mind very early on, they can stop after 5 years. They can even stop after 2 years if they want. And you can take it further with varying the funding up and down. You can make it very, very flexible in that regard as well. But to answer the question, yes, you can get a policy on a newborn child. It's very easy to do as the underwriting is minimal, and it's a very nice tool to build cash value, because the worst part about these products are the early years. If I'm starting a policy for a newborn or a minor, they're not going to even realize what they have. By the time they do realize what they have, that policy is compounding and they've got a nice amount of cash value along with life insurance as well. Hope you enjoyed this video. See you on the next one.